Welcome to The Explainer, where we break down the big stories using the source material. Okay, so here's a weird one for you. Tesla's stock is absolutely flying, but its biggest, most vocal supporter is selling. It just doesn't add up, right? So let's get into it and figure out what's really going on.
First things first, you gotta understand just how well Tesla's been doing. Over the last 6 months, the stock has been on an absolute tear, rocketing up nearly 50%. And look, this isn't just some random market bump. This is a massive rally, and it's all built on this huge wave of optimism about Tesla's future in AI and autonomous driving.
So that brings us right to the heart of this whole mystery. You've got Cathie Wood from ARK Invest. I mean, she's probably Tesla's #1 fan, its biggest bull, and she's selling shares. It's a move that's got a lot of people just scratching their heads. I mean, why would you sell when the stock is on fire like this?
And we're not talking about some small, insignificant trim here. We're talking about sales in the millions and millions of dollars. Yeah, a move that big is definitely going to get people talking and asking a whole lot of questions.
Okay, so the sale that really caught everyone's attention went down on December 18th. Check this out. Over $11 million worth of Tesla shares sold. And it's the timing that's so wild, right? Selling a stock that's doing this well. But here's the thing. As you're about to see, this wasn't a one-off.
Right, so this wasn't some sudden panic sell. Not at all. When you zoom out and look at the bigger picture, you start to see a very clear pattern. This isn't really about losing faith in Tesla. It's actually about a super disciplined investment strategy.
And here's that pattern I was talking about. This timeline makes it pretty clear, right? That December 18th sale was just the latest in a series of moves. ARK has been consistently, methodically trimming its Tesla position for a couple of months now. This looks a lot more like a calculated plan than a sudden freakout.
So what's the deal then? Well, this is a classic move in the investing world. It's called portfolio management or sometimes just profit-taking. Think about it. When one of your stocks has an incredible run, it becomes a much bigger piece of your overall portfolio pie. So you sell just a little bit to lock in some of those awesome gains and manage your risk. It's just smart. It doesn't mean you've lost faith in the company's future at all.
And if you need any more proof that ARK is still all in on Tesla, just look at this. Even after all that selling, Tesla is still their single biggest holding. And not just by a little bit, by a huge margin. It's over 10% of their entire fund. That's more than double the next company on the list. So yeah, they are absolutely still in the Tesla game.
Okay, so that's Cathie Wood's side of the story. But, she's not the only one with an opinion on Tesla. Let's shift gears and look at what the rest of Wall Street is thinking. Because, well, let's just say they are not all on the same page. And the big sticking point for pretty much everyone, Tesla's sky-high valuation.
Yeah, this is the number that makes a lot of analysts just stop and stare. The stock is trading at more than 375 times its forward earnings. To give you some perspective, that's over 1,700% higher than the median for the rest of the auto sector. I mean, that is a massive, massive number. And it's enough to make a lot of traditional investors pretty nervous.
And it's not just that one number either. Just take a look at these price targets from some of the biggest names on the street. You've got the stock trading over $480, but a bunch of these major firms, Morgan Stanley, Goldman Sachs, they think it's worth way less than that. And then you have Wells Fargo, whoa, with a target of just $120. That tells you there's a lot of skepticism out there.
This quote from Morgan Stanley's analyst really hits the nail on the head for what a lot of Wall Street is thinking. What they're basically saying is, hey, all that cool future stuff, the AI, the robotaxis, all of it, we already know about it, and the market has already baked that good news into the stock price. In other words, the price is already high because everyone expects these great things to happen. And if that's true, where's the room left for it to grow?
But see, this is where Cathie Wood's vision totally diverges from the rest of the street. She's not playing the short game. She isn't worried about next quarter's car sales. Her eyes are on the long term, on a future where she sees Tesla completely transforming into something else entirely. For her, calling Tesla a car company is like calling Amazon a bookstore. It just misses the whole point. In her view, Tesla is this incredible technology platform sitting right at the intersection of 3 of the biggest revolutions happening today: robotics, energy storage, and artificial intelligence. You see, selling cars is just step 1 in a much, much bigger game plan.
And this right here is the absolute core of her incredibly bullish long-term thesis. She believes that a fleet of autonomous robotaxis will be the real driver of Tesla's value, so much so that she thinks it could account for 90% of the company's entire value in just 5 years. Think about that. In that future, Tesla isn't really a car company anymore. It's a transportation as a service company. It's not about selling cars, it's about selling rides.
So you can see how it all boils down to one fundamental question, right? Is Tesla a car company with a really, really high price tag, or is it a revolutionary tech company that's just getting warmed up? How you answer that one question is everything. It's the difference between seeing an overvalued stock or a once-in-a-generation opportunity. So the real question is, which one is it?